Hey everyone, Mortgage Nerd here. So I already have a lot of clients coming to me saying, how can I refinance out of my HELOC? What's a HELOC? It's a home equity line of credit. Because rates went up and people have a first mortgage maybe at 3%, and to refinance and cash out, their rate would be 7%. They decided we're gonna get a home equity line of credit, a second mortgage on top of the first mortgage. This way you're not affecting the rate of the first mortgage, and you use that home equity line of credit to remodel your house or invest in another property. There's so many different reasons that people would do that. But now that that rate is 9% for some people, maybe 10, they're trying to get out of that, they're trying to drop that rate. And you could refinance it to a fixed rate, but I really think in the coming months is where it's going to be most beneficial. In May, when we see inflation drop more because the lag in shelter costs is keeping the inflation, the CPI high, shelter costs meaning rents that have already started going down, but it's just lagging in the reporting in the CPI. So once we see that coming down, we're going to have a much better summer when it comes to interest rates, probably have rates in the 5s at that time. I think we're going to have a refinance boom of people getting out of their home equity lines of credit and just refinancing all into one mortgage at that rate instead of having two different mortgages at two different rates. I do have a calculator. It's a blended rate calculator. It'll show us if it's beneficial to refinance it or not. Maybe if we roll in some debts, car payments, things like that, then it's absolutely beneficial. I have another calculator for that to show you your net savings over time. You could even take the savings that you have in those payments and accelerate the mortgage, and you save even more money. Tons of ways of approaching this. Don't just look at that number as the interest rate and that's it. Mortgage Nerd out.